Good morning, guys. Hello, my name is Yordan, and this is the Friday session. Traditionally, we hold an open webinar on Fridays to show you what we are doing in the Traders Academy Co-op and how to basically work with the report, follow up on the trades and setups and ideas discussed during the week. So, for those of you coming here for the first time, this is how the report looks like. You have introduction video, how to use it. Webinars, I would say that those are mandatory. If you become a member or you're already a member, please watch these webinars to understand what we are doing. Followed by the watch list, a table with the instruments you're trading and the time frames. And then below we have the comment section. That being said, let's go ahead and check out what we had during the week. Now, before we look at the charts, quick reminder, we have NFP today, so take it easy with the short-term trading. It has to be either very short-term for you to get out before the actual news, or just wait for the Monday to come. All right, first thing is first, cut franc. I think that was one of the best setups of the week, simply because it was absolutely clear, technically correct pattern. First of all, we have a triple cycle. This triple cycle is formed inside this pattern. So in other words, cycle completed right at the top of this range. And this is where we are looking for possible sell opportunities. And if we go back to the chart, and again, my lines are gone. If we go back to the chart, you'll see what we're talking about. Now, first of all, here we got a false break with beautiful divergence daily. Dropping down to H4, we can see on the very last part here, which was also a cycle on its own, we got a reversal pattern. This is convergence. I like to look at it on the 1 hour chart. It looks a bit better in my opinion. And we got the pullback. So if you're looking for extra confirmations here, you most likely did not get a trigger. This pattern I've traded with the 50%, which was somewhere around here for the sells. Immediate spike down, which in my opinion provided here. Let's just measure it, guys. I guess. So we have 50 versus 50. Okay, so 1-to-1 was provided. If your first target was risk reward of 1-to-1, you should be already cashing in. Of course, if you're using this type of entries. I personally am holding my position, did not cash out anything, and I will be cashing out at 1-to-2, which is approximately here somewhere. Okay. 50, 100 here, yeah, so that zone. Of course, I can allow myself to cut the trade here if I see signs against and the price starts moving slower and slower like this. I will cash out. I will not fight the last 10 pips, let's say, because we have a swing and we have this level. Okay, no problem at all, but it will be much better than the 1-to-1. And of course, we're looking at this big pattern on the daily chart, which means, technically speaking, we can be going towards the downside here. So plenty of room, technically speaking, and that's why I'm holding that position for better risk reward ratio, not 1-to-1 for target one. All right, then the next part that we have, by the way, I did not cover both images here, I believe. Sell rallies, yeah, that's pretty much the idea. Okay, Euro franc, which did complete a cycle here, triple cycle, and now the expectation is of ABCD to happen in terms of correction, and then very likely we're going to see continuation lower. So the idea here is to trade like BC And if you do like this setup, that means pullbacks should be providing you with buy opportunities. It's interesting because here we have Dow bottom, or it's slightly above it. It doesn't change much. In my opinion, this is a leading diagonal. And we've started getting here the false breaks already with divergences. That means we need to see pushes to the downside. Of course, the ideal zone for this buy would be to first of all find a beautiful supportive zone. And the very first level I'm going to mark on the chart is right here, followed by this one. I'm not going to put all the lines because it will be too much, but you get the point. So basically this is where the support starts to form, big range. We have plenty of levels on the way. And in order to trade it, we want to see pullbacks. I'll remove this for a second. There we go. And then we want to see where the 50% matches. So this is approximately the zone, ideal zone, where we want to start looking for these buys. Why this zone? Because if it starts moving with an angle like this, in this kind of time frame, the idea is for the price to push towards the upper trend line, towards the 50 zone, and to meet both of these levels at the same time, approximately right there. In other words, if it drops immediately like that, we need to be looking for the next levels, and the next levels, horizontal ones, will be here. Then we have the 61.8, and then we have this one. So basically, depending on the way it's going to develop to the downside, we're going to find the best place, basically the best support available for this entry. So you're franc expecting second wave to the upside. I'll just go ahead and clean up a bit. There we go. Okay. So that's about euro franc. Then we have euro pound, which in my opinion became a very tricky situation. And the reason is we have strong bearish momentum to the downside. We have trend line, and yes, this divergence is there, but based on this spike, this is already hidden divergence here. At least this is how I read it. That level was broken, and the price is holding below. The price is also holding the trend line, and this is why I would like to go back to the live chart, but before that, let's cover the H4. So 3 higher highs, higher low structure. In other words, this is leading diagonal, which means we're expecting to see continuation upwards. And more or less we did, euro pound. We did right here. Okay, that was the pullback. It reached here the corrective levels. It pushed, it missed the first target by a few pips. But that was already the trend line there, which blocked the price. And now this is why it becomes tricky. First of all, as we said, hidden divergence, that puts bearish pressure. Second of all, 4-hour chart, it completed, we can read it in many ways, but it doesn't matter how we read it, it somehow is stuck right here. So the first attempt, not sure if you cashed out or not, or you got kicked out in break even, or you're still holding it, but it completed divergence. Yes, we have bullish hidden which formed right now, that's fact, but I will focus on this level. If this level 88.30 is broken to the downside, we're very likely going to see that low being reached here. So that's the only thing I don't like here. During that stage on the 1-hour chart, we managed to get it. Now it becomes trickier. Okay, silence against, divergence against here. Resistance is on the way. This is dynamic resistance, the trend line. So you can see the bearish pressure. And yesterday I did share, for those of you who are in the TAC co-op, I did share this triangle. we got the attempt to go higher. We broke here the highs and everything. It looked perfect, and then immediate rejection. So obviously, this dynamic resistance here is very strong, and it doesn't let this thing to continue to the upside. So currently, I don't have any setups to share with you. And I would even say I'm more or less neutral. I would like to see either break below here or break above here, basically that range. Until then, I'm not going to attempt second trade for Euro Pound. Next on the list, any questions, guys? Is everything clear? If you have any questions, please post them in the question box. Okay. Pound Aussie again with the three highs, three higher lows, higher highs structure. Expectation for continuation upwards. This is the daily chart. On the 4-hour chart, we got the breakout plus false break right here with this divergence, and of course the continuing divergence that provided us with convergence, bullish convergence, which means we're expecting it to continue higher. And if we go back to the live chart, you'll see something very interesting happening. First of all, during the week, I think that was yesterday, we were focused on this corrective pattern. We got the breakout, and this one failed almost immediately with immediate push to the downside. So the logical protection would be, let's say here, right? If you like the risk reward ratio, it's not ideal, because if we compare the breakout, that's 130 pips, and towards the top we have only 90 pips, so we don't even have 1-to-1. So this trade is a bit, you know, maybe not ideal for trading, but generally let's cover the pattern. So breakout, false break, stop loss. Let's say we traded it and it got triggered. Now I'm going to remove this and I'm going to focus on the horizontal range, because we had false break here and now we're getting a possible false break here. We don't know if it's going to be a false break yet. Indicators are currently not agreeing with that, so that could be easily pushing lower and continuing lower to complete something like this. Okay, but as long as we're holding that zone right here, the idea of the range remains. That means short-term positions for buys towards the top, scalping, could be also something for us to look for. What else we can say here is that this thing is moving inside a range channel, and this one is much better than the other pound we're going to cover in a second, for one reason. If that happens, we have the 100%, of course it depends on how the price is going to develop to the downside, but if it happens and breaks lower, the 100% comes to much better levels compared with the trend line. It simply gives us the room for that to happen and not invalidate the channel. So those are the two options, either this and buys from here, or we're playing with the range for possible continuation upwards. And again, I would stick to this bullish idea from the bottom, aggressive one with very tiny risk, just because I want to have enough risk reward ratio towards the top. Okay, that's about pound Aussie. Then we have pound Kiwi, where what is also expecting this to happen. And I'm going to tell you the difference between me and him, why we are looking for something different. Now, here we can be looking at this one as a triple or a double. Bottom line is it formed divergence and pullbacks are expected. Now notice how we already have hidden divergence which ticked up for the first time. That means the bullish pressure is very strong. And now if we go on Euro Kiwi, by the way, Euro Kiwi we can also cover it. If we go to this one, you see where the trend line is. And ABCD pattern to the 100% would mean breakout below the low and breakout below the trend line, as compared to pound Aussie, where we have room to the downside because the channel is wider. So that's why I prefer pound Aussie over pound Kiwi here for this specific reason. Why I don't like it? Because if we get a breakout and this divergence starts to get broken, it will become tricky whether we're looking at breakout, because the price needs to push all that distance to the downside to complete the 100%. And just imagine it, guys. How can you say this is not a breakout later on, even though there will be divergence, let's say? Tricky, okay? That's why pound Aussie, in my opinion, is much better. My idea here was, if that zone holds along with the 61.8, I can allow myself this tiny false break here to complete the divergence. Then the buys would be welcomed with the big trend line. No issues with that. Okay, something like this. The risk reward ratio allows us to go ahead and make a fantastic trade. More than 1 to 2 will be available. So that's pound Kiwi. Before we move on, though, I would like to update you about Euro Kiwi. Now, for Euro Kiwi, we've been following the trend lines, and as you can see, we're getting a breakout here. That's not good. I don't like it, for the sole reason that I wanted to see the price reaching these levels. I wanted to see another false break and so on and so on. Bottom line is, though, we have first divergences, second divergences, multiple false breaks, which means these sales, potential sales here, could be already a trigger for the sell idea. To make it a bit more conservative, though, I will follow up for this move to create impulsive structure, and I will wait for pullbacks to sell. That's the only way. I wouldn't sell here immediately, because you have nothing backing you up for that sell before that, unless you're looking at the daily chart. At least I'm not finding any serious reason to sell based on H1. All right, then we have Kiwi cut, 60 daily. Kiwi cut completed here. In my opinion, this is a big double wave, and here we can also go ahead and find inner cycles inside of it. So this is what you see here, triple cycle inside the final leg. This is a weekly level, which was also false broken along with this bullish divergence. In dollar cut, the interesting part, guys, is we got divergences on 3 time frames, and the synchronization, dollar cut, the synchronization between all 3 of them really provided some amazing push lower. So first of all, the 100% of this move reached. Okay, second of all, that level, as we said, weekly level, is right here. Okay, and currently we're bouncing off of it. So daily divergence, 4-hour chart divergence right here, 1-hour chart, first divergence, and then double bottom. If you watch the webinar about the distances, you'll now see what we're talking about. So basically, this distance, it's not a positive number, it becomes 0 or a negative number, because the price, the momentum is not there and they cannot make a new low. And breakout here is the first most aggressive entry you can be attacking. Of course, very tiny risk, but it's good because everything else is fitting and telling you it's time for reversal. So this tiny protection could provide you with very quick profits and then the next targets. We mentioned yesterday that this is a good place for continuation because we want to be looking at a 5-leg structure which was delivered, and after the breakout it pushed, so this one paid, divergence started forming. This is Kiwi, so I don't expect it to give us very big pullbacks or to give that pullback anytime soon. This pair is like, I don't know, train, heavyweight train. It cannot stop moving. So all these short-term 15-minute, 1-hour chart setups, guys, are ideal for scalping. If this is what you're doing, Kiwi is the perfect pair. And now we have all the reasons to believe we're going to see at least some corrections. We have the trend line here, so something like this could be provided. Of course, that's a daily level, which if broken, we're going to get convergence and so on and so on. But that's for further on. I would like to also remind you about the weekly channel, and we're currently around, come on, we're currently around the bottom of it, but not yet there. That's why I'm saying pullbacks, and I would expect to see another push lower here to get to the low, to the bottom. So that's it. Longer term, very likely continuation lower. Shorter term, bullish, as bullish as it could be. Pullbacks and sells is what we are going to focus on during the next week. Where is this one? Okay, that's about Kiwi. Now, before we move on to indices and commodities and so on, do you have any questions about any Forex pair? Cable. What would you like to do with cable? What's your idea there? Or where is it heading? This is the $1,000,000 question. If I knew, I would be a billionaire. For cable specifically, I don't have a clear analysis and direction. I can tell you what I'm seeing, and you can make the conclusion after it. So basically, bearish move to the downside, which ended here with this 1-leg divergence false break, and it managed to break above. The tricky part is we got divergence on the push up instead of convergence. The only convergence we got is between these two, the MAs of MACD and the RSI. Then the big drop to the downside without any trend lines, without anything. And that big drop created here impulsive move. So this impulsive move is currently developing a possible ABCD with hidden divergence, which means, in my opinion, we're going to see continuation lower. So that can be some idea for you. But on the other hand, why I said it's tricky? It's tricky because it didn't stop at the 100 level, it went slightly above it. And now we have impulse with possible impulse to the upside. So if that happens, it becomes, Velisłav will understand me here, mishmash. Basically mixture of signals on all time frames, which is something I don't like. I would like to see all of them, or at least 2 out of the 3 time frames, to be an agreement. In that case, I don't see it happening, and that's why I don't like cable. The others are slightly better. Tommy, your thoughts on Aussie franc H1? You're looking for what, continuation up, or trade the correction, or? You're welcome, man. We got this one, which was followed by that one, and then we set possible range and continuation lower. Currently, we are inside the range, so in my opinion, this is top of the range with triple cycle. That means possible sell opportunities could be provided. In terms of daily and weekly, not very clear. Obviously, the trend is bearish. From weekly chart, the trend is bearish from daily chart as well. But it's not the best pair in terms of multi-time frame analysis. We're still fighting around this trend line, which is something I don't like. Spikes up and down, closing above and below it. I don't know what to tell you. Only short term. Short term, if you find yourself a setup, there you go. On the 1 hour chart, you got the divergence here. 15-minute chart, find yourself an entry, and you might be looking at a fantastic sell opportunity. Of course, small risks, because the direction is not very clear. But in my opinion, sells would make a lot of sense, because the most recent price action is bearish, correction, ranging correction, and now continuation lower. Trade correction, exactly. You're welcome. Cool. Other questions about Forex pairs, guys? FX Delta, what would you like to know? Contact me in private afterwards, and or send us an email with any questions. There are plenty of webinars, you can watch it. It's completely revealed how it works. You can you can send us an email at Yordan@tradersacademyclub.com. All right, or just ask the support from Traders Academy Club to give you my Skype coordinates, and you can contact me. Cool. Next one is what is it? Indices. Monthly chart, guys. Cycle. The expectation from what is now to see corrective cycle in play, which should be taking the form of ABCD. Then we're moving lower to the weekly chart, where we got the false break here, and clearly he's marking this one as bearish divergence. I wouldn't call it bearish divergence, not sure why he did, but anyways, this is what he's showing, so this is what I'm transferring to you as well. And then we have the daily chart, and now we're talking. This is a triple top with beautiful bearish pressure everywhere, which managed to break, and now we're looking at this push lower. In my opinion, there is another view here, which is a range. The reason for that is very simple. This is an impulsive move. This is an impulsive move. And then that one, I'm not really sure what to tell you. So in other words, if we ignore this part for a second, after impulse, We got false break above, we got false break below, actually two false breaks here. And without any divergences, the price managed to create the inverted head and shoulders and pushed higher. So that means there is a very good chance we're going to be stuck in this range. Once we get to this zone, if you're in a sell, time to cash out, guys. As to the shorter time frames, gold, gas, what was that, Germany. To the shorter time frames, this is the 4-hour chart. That's the triple top here. This should be providing us with some corrective pattern and possible continuation lower. So Germany in the very short term also focusing on sales. If you're trading indices, of course. Next one, weekly and 4-hour chart. Now that I would call a divergence. Triple cycle, not sure if we can call that a triple cycle though. But the divergence is there for sure. So we have the first divergence here, the second one is here, false break number 1, double top. And we have this previous zone, amazing level, which we're trying to close below. Today we will understand whether this is going to happen or not. But the idea is that we have bearish pressure. 3 lows highs structure, this is a leading diagonal, and that means we're looking for continuation lower. This is what was supposed to happen with euro pound, but then we got blocked by the trend line. In that case, it did not happen. I'm pretty sure we're going to get delta patterns here on the 4-hour chart. So selling this combo 4-hour chart with 30-minute chart could be an interesting situation. No delta pattern, but no hidden divergence also. So just make sure you draw yourself the lines, the horizontal levels, and the Fibo level. Now you have a lot to work with. This is the next level right here. So basically 50 and the 61.8 along with this trend line. Any pullback, the higher it goes, the better. Then we're going to get the hidden divergence. Then we're going to reach the breakout zone of this thing here. And that means optimal entry for the sells. All right, that's about S&P. Now gold and gas are the two commodities we're following. Gold, I can share another view here. First of all, this is the count that Vlad has. Guys, if you're interested in the alternative count, you can find it in the Telegram group. I shared it right before the LTR. But here also, I wouldn't agree specifically to this idea. And this idea tells us one thing. We got cycle, we got ABCD, we're now looking for possible breakouts of this trend line. That's perfectly fine, and usually I would agree because technically it is there. The part I don't agree with is the overall count. And the overall count is telling us that we have, I'm not gonna bore you with that, but basically the idea is we need to see deeper pullback here. Okay, that's the bottom line of the count I was going to show you. And that means this trend line, in my opinion, has more reasons to hold and for the price to bounce rather than to break. Because we're already in extreme situations on weekly and daily. And this deeper pullback is required for one reason only, to get more buyers and to continue higher. I do believe we're currently inside leg number 3. Okay, and that means we need to get more power here to complete something bigger, which will show us that. So that's why deeper pullbacks here would make more sense than breakout. That's the only reason. Other than that, absolutely correct. ABCD is there, breakout. If it happens, of course, we can look for the buys, but my focus and hope is to get the bounces, not the breakouts, because then the buys will be much, much, much better. So that's Goldie. Then we have natural gas, which finally find a way to break, and that was and still is the perfect setup, guys. First of all, we have the seasonality, which means in the winter periods we can expect the gas to become more expensive. Then we have the technical analysis. Then we have this head and shoulders here on the top, which said the price should be pushed lower. This is the 100%. That was the 50%, somewhere around here. And this is where we got the divergence and then the break above. It is a bit surprising because yesterday we saw the natural gas storage supply. It came out, the report. The actual numbers were better than what they were expecting and forecasting. So again, I'm a bit surprised there is more supply, but in that equation we're missing the demand, so we can't really say. I do see one alternative here, which is this one, to push once again lower to create false breaks. I don't think it will be happening, but after all, if it happens, we need to be prepared for pretty much both situations. So nothing will be changing. It will be just completing, in my opinion, another push lower. And in terms of time, if we look back to the history, December approximately is the time when we have the peaks. So I'm also planning to hold this position until approximately end of December. And this is where, based on timing and technical analysis, of course, I'm going to cash it out. This is also fantastic because we have the hidden divergence from there and basically everything in place. So natural gas could be providing us with amazing opportunity here. Do we have anything else? The two stocks we're trading, buyer is currently going towards the trend line, which in my opinion is good. Here also, in my opinion, we're starting to form some sort of leading diagonal, and now, since that trend line is getting on the way, I would expect a bounces from that. The idea is based on weekly cycle, multiple divergences here, and bullish divergence, and so on and so on. Here is buyer, so hidden divergence is in place. This is the 4-hour chart, where we can expect one more push lower. We're probably going to get delta pattern here, so pullbacks, one more push lower, and then expecting continuation to the upside. And last one, Deutsche Bank, which started moving lower for some reason. And I'm talking about strong push to the downside. And the weird part is we don't have divergence yet, hidden one between these two. So there is definitely something fishy going on with this trade. We've already passed the 50% and the hidden divergence is not there, guys. This is a fact. So careful with Deutsche Bank. And that's basically our whole list. Yep. Any other questions, guys? All right. In that case, have an amazing weekend. Recharge the batteries, because next week we're going to have plenty of opportunities. Many things are again forming on the higher time frames. This is good. We need to grab that moment and make some money. So that's about it. Let's do it next week again, huh? Power, yeah. Pound franc. Let's check it out. Power franc, just like with the others, we're expecting continuation higher. The first attempt here with the breakout was not invalidated, but it failed. Then we got another divergence, and after this divergence, we said continuation upwards is expected. So power, come on, pound franc is definitely for buys. All right. Okay. All right, guys. Have a wonderful weekend. Bye for now.